I'm Cynthia Rowland, and this is episode 80 of EO Radio Show. In this episode, I'm happy to refresh EO Radio Show episode 21, the first of our 2 episodes from several years ago, which explored private foundation rules using the Apple TV Plus series called Loot, starring Maya Rudolph. Season 2 of Loot was released early in April 2024, and we plan to revisit the Wells Foundation and private foundation rules and the other legal issues in an episode later this spring. To get all of our listeners caught up, here's the first of our 2 original episodes exploring Season 1 of Loot. But, spoiler alert, my partner Hans Young and I give away some, but not all of the fun plot lines. So if you want to laugh along with the series, go binge watch Season 1 first. Then come back and listen to this episode and the next one for the technical legal issues we spotted in Season 1 of Loot. Welcome to the EO Radio Show, your nonprofit legal resource. Brought to you by the Exempt Organizations Group at Farella, Braun & Martel. My name is Cynthia Rowland, and I'm a partner at Farella. I'm a business and tax lawyer with more than 30 years of experience advising clients on nonprofit and charity law. Through this podcast, our lawyers and guests will discuss a range of legal and business issues impacting the nonprofit world because we understand you work hard every day to make your community a better place to live and do business. Many of our programs focus on the basics, and at times we'll do a deep dive into narrow and complicated legal issues. Again, welcome to the EO Radio Show. We're glad you're here. I'm delighted to be joined today by Hans Young, a partner here at Farella who assists high net worth individuals and families in achieving their wealth transfer, tax planning, business succession planning, and charitable objectives. Hans is a San Francisco native and lifelong Warriors fan. He also enjoys photography, music, cooking, and occasionally watching low-budget action thrillers in spite of, and sometimes I think because of, their typically low Rotten Tomatoes scores. Most of all, Hans loves spending time and traveling with his wife and young children. And I have to credit Hans with the idea of using media reviews to highlight legal issues. Definitely more entertaining than my usual approach. Welcome to the show, Hans.
Thanks, Cynthia. Happy to be on.
Why don't you start up our conversation this week with a recap of Loot? And just to warn the listeners, there might be some spoilers in here. So if you really don't want us to spoil the plotline for you, go binge watch all the episodes first and then come back and listen to us. So Hans, start us off. What is Loot all about? Yeah,
so it's an Apple TV Plus series. It's a comedy created by Matt Hubbard and Alan Yang. They're writers who worked on shows like Parks and Recreation. And it stars Maya Rudolph as Molly Wells, who, as we're introduced to in episode 1, is married to a tech billionaire, John Novak, played by Adam Scott, who's pretty funny. It's a little bit amorphous what John Novak does, other than he's a tech billionaire. So we're introduced to Molly, and she has a ridiculous level of luxury and lifestyle. So as we start the series, I believe she's turning 45, and for her birthday, John buys her a yacht. And there are details such as Seal, not a seal, the animal, but the recording artist Seal makes an appearance at the birthday party to sing her happy birthday. Just a lot of clear indications that they live at a level of wealth that most people don't have access to. The show kind of kicks off as midway through the birthday party, she discovers that John is having an affair with his much younger assistant. Molly then demands a divorce, and it moves forward. And by the end of the episode, you find out that they have settled their marital dissolution, and she's received $87 billion as a part of the divorce, making her, I think it's the 3rd wealthiest woman in the U.S. The rest of the show really moves on to, she spends some time kind of partying and enjoying her newly single life. But she's suddenly contacted by Sophia, another character in the show, who is the director of apparently a charitable foundation that Molly founded many years ago but forgot about because she was busy living a very lavish lifestyle. And the rest of the show really takes on, it's a journey of self-discovery for Molly as she's got a personal assistant, Nicholas, essentially work, quote unquote, at the foundation. They take a interest in it and they really dive into it. And the show at times takes on the form of kind of a workplace comedy. It's got some romantic elements in it. And again, wrapped up in this exterior of overall being a comedy with, again, some dramatic elements in it. The show walks through Molly and her assistant's life as they integrate themselves into the foundation and really get a sense of what they do on a day-to-day basis. And as they say, hilarity and drama ensue from that setting.
Yeah. And just to clarify for our listeners, Hans did say $87 billion was her settlement from the divorce. So mind-boggling numbers. The house they purportedly live in is just over the top lavish. It's a real house in LA, which I've found on some other YouTube shows that I watch. But anyway, it's quite the setting for a private foundation understanding and some technical topics. So we have 6 major characters, well, 7, including the husband. There's Molly, who's our main character, the foundation director, Sophia, Howard, one of my favorites, who's Molly's distant cousin and the foundation IT specialist, Arthur, the foundation accountant, Nicholas, who Hans already mentioned, who is Molly's personal assistant, and he's one of my favorites also. I really like him. Celebrity chef David Chang, who plays himself. So we've got cameos from a few, Seal and David Chang, and maybe there are some others, but those are the ones that stood out for me.
I think the house, going back to your house point, I think the fact that she has an entire looked like a huge walk-in closet that essentially was her candy room. It was just filled with like very intricately placed jars of candy.
Yeah, that was a nice touch.
Yeah. And so I guess we'll start in episode 1. And we're not going in order, but there's a scene here or the premise here, which is Molly discovers she has a foundation. How can she just waltz into the foundation, so to speak, and essentially take over? It has its own, as we mentioned, Sophia, who's the foundation director, is already running it, and Molly seems to just go right in. Does she own the foundation, or what's her role as being the person who created it and funded it? How can she do all these things that the show depicts?
Yeah, she seems to just do it on a whim. She just walks in. And Sophia at one point even makes a comment to the effect that, well, even if I didn't agree with you, I have to do it, right? Because Molly's her boss. So it's a little unusual for a founder to not even know that they have a foundation or to forget that and be that disengaged. A lot of times a founder might be the sole member of the board of directors that really does control everything. It would be really unusual for a sole director to be that engaged and not even know anything. So my suspicion is that it would be a structure more like a designator situation, where we often do this in California nonprofits and in other states allow it also, where a particular person has the right to name the people who sit on the fiduciary board. And then that board appoints the officers and things happen just like in a corporation. But that designator, that role is really like a shareholder in the sense of being able to decide who's on the board and who runs it, but not a shareholder in the sense of owning anything. So anything that's given to the foundation can't come back out to Molly. It has to stay in the foundation. So my suspicion is that Wells Foundation was set up with a designator structure when Molly realized that she could name herself to the board or name herself as chief executive or just start volunteering to be around and run things. As a designator, she'd have the right to do that. For listeners who want more information about the distinction between designator, director, officer, there's an earlier Nonprofit Basics episode that walks through those details. But for purposes of our comedy, it did seem to me that it would make some sense that Molly could just walk in and start changing everything, because as a designator, she would have that right.
Right. Then in another episode, Molly takes the foundation staff on what she describes as a bonding retreat to Miami. So we come to find out that the real reason Molly wants to go on this retreat is she wants to party with her girlfriends. Of course, that's a fact she doesn't make known to the rest of the characters, and they find out later. But what do you think about a staff retreat using a private jet? Because I think it's pretty clear that it's Molly takes them on this pretty lavish trip. And certainly, what a bonding retreat. And she takes it and uses her own private jet. What about that? Is that normal? Can that happen using your own personal assets, especially one of that magnitude for this foundation?
It is I wouldn't say common, but over the course of my career, I've worked with a number of high net worth donors that do in fact have their own private plane that they use for their foundation activities. So using a private plane or private car or a fleet of, 10 high-end SUVs to go to an opening, as long as those are her personal assets, yes, a founder can provide any amount of support or lavish benefits to foundation employees out of their own private money as she wants to. The appearances aren't always great, but there's not state law limits on use of private assets for foundation use. But there are a lot of rules that limit the use of foundation assets. So typically, a reasonable and necessary expense for a staff retreat can be paid for. There's another point where they all go out to, can't remember if it's a pizza parlor or a hamburger joint. That's sort of a staff expense a foundation could pay for because it's necessary and reasonable. And as long as the expense of an event is commensurate with the size of the foundation and the business purpose of the retreat, you could use foundation assets. But you can't use a foundation asset typically. I mean, maybe there's one out there, but it would be an unusual circumstance where you could justify buying a private jet or paying the costs of the private jet to take the foundation staff on retreat. But anyway, here, like you said, the clear implication from the plot line is that Molly is covering all the costs of travel and a few days of staff bonding, a staff retreat, again, very common, nothing wrong with that. And it wouldn't shock any state attorney general into taking action for a misuse of foundation staff time for that kind of a retreat. Before I forget to make this point, I want to mention that in this episode, we're going to talk mostly about the Internal Revenue Code rules, the federal tax rules that impose penalties on foundations. It's important to also keep in mind that state attorney generals also have supervisory authority over charities that are operating in their state. So, and some states are more active in pursuing foundations for improper lavish spending. But here, like I mentioned, this staff retreat to Miami, it seems to be paid for by the founder. So I don't think that California Attorney General's office would have much interest in it. Now, the court of public opinion and social media, that's another question. And I think, in fact, some of the staff members had a little bit of trouble with the overall idea of that kind of a retreat.
Right. Yeah, I think at some other point in the series, they do have, I think, either dinner or some type of outing at a Dave & Buster's, which is probably more commensurate with what they're normally doing.
Right.
So in episode 4, I believe, we find out there's a theme park disaster in the Philippines. It turns out that Molly owns the theme park. It's part of the divorce settlement that she received. It's one of the assets she got and that she had no idea about, of course. How is an amusement park a charitable asset? That's
a good point. And that whole episode talks about a number of different assets. It's not clear in this series that the foundation itself actually owns these investments that they're looking at. But let's just assume that the foundation does own the theme park. There's also an alpaca ranch. It's a very good question. How can a foundation own things like that? Assuming that it does own the assets, which tax rules do we have to look at? There are 2 Internal Revenue Code provisions that are implicated here for both the theme park and the ranch and some of the others. The first is the concept of a jeopardizing investment. Even imagining the immense size of the foundation, while the alpaca ranch probably wouldn't be of significant size under the jeopardizing investment rules, something like a theme park. And I think they said all the theme parks in the Philippines were owned by Molly. If they were owned by, and setting aside who they were owned by as a fact in the plot line, if they were owned by the foundation, the question is this a prohibited jeopardizing investment? And the rule for that is that an investment that is of such a size and riskiness that the asset itself jeopardizes the carrying out of the foundation's exempt purpose, then the investment is going to be considered in violation of the jeopardizing investment rules. So the question that the IRS asks is, when the foundation acquired this investment, the board can look at risk and reward trade-offs in deciding whether an investment is a good one or not. And there's no particular type of asset that's not permitted. Something like owning all of the theme parks in a particular geographic region, if that were a major part of a foundation's assets, yeah, we'd want to look at whether that's jeopardizing their ability to carry on their exempt purpose. Digressing a little bit, because there are a lot of important exceptions to the jeopardizing investment rules, and those rules don't apply to property that's contributed to the foundation as a gift. So while I think the plot point here makes it pretty clear that Molly owns the theme park in her own right, and it's not a foundation asset, it certainly wouldn't be a good idea for her to give the theme parks to the foundation, but just by giving them to the foundation, that would not be a jeopardizing investment.
The show doesn't make entirely clear, it's a little bit ambiguous or vague, what the overall purpose of the foundation. It kind of gives you a couple clues here and there about things they're giving to, but it's not entirely clear what the overarching purpose is. And so they're playing a little bit loose with just the overall idea of what this was even set up to do.
That's absolutely true. The theme park discussion and the ranch discussion, those also trigger another important point that's worth thinking about for a foundation that seems to have assets in some odd categories other than marketable securities. And that is that foundations have a limitation on the business holdings that they can hold. These rules came into the code in 1969 when there was a great deal of concern in Congress that wealthy people were contributing the business to charity so that it could operate on an income tax exempt basis, but the family was still running the company. So there's a limit on what's termed excess business holdings. That is ownership by a foundation of a business enterprise to such an extent that it violates this idea that foundations should not be operating for-profit businesses. In most circumstances, these rules allow a private foundation to hold not more than a 20% ownership interest in any business. And a theme park would be a business. An alpaca ranch would be a business. These permitted holdings are reduced by the amount that's owned by the disqualified persons. Generally speaking, disqualified persons for purposes of the excess business holding rules includes all of the foundation managers, which includes the trustees, the directors, the officers, and other persons with that level of authority. Substantial contributors, so that would be Molly, and that includes individuals and entities that Molly owns. Family members of Molly, of the disqualified persons, and entities controlled by her. Circling back to the limitation on business holdings, your 20% limit is reduced by the amount of interest that's also owned by these disqualified persons. So as an example, if Molly holds 20% of the amusement park shares, the foundation can't hold any of those shares. There's a de minimis allowance, but the big idea is that you don't want private foundations owning these business enterprises along with other disqualified persons.
One of the categories of disqualified persons that you mentioned includes family members. And we, of course, know at the very beginning of the series that Howard, who's played by Ron Funches, is actually Molly's distant cousin. And that I believe she got him a job at the foundation, which doesn't seem quite right. How did that happen? And is this permissible under the rules?
Yeah, that's a really good question. As I was mentioning in this definition of disqualified persons, it includes the founder and the key decision makers and their family members. So family members is defined somewhat narrowly for this provision of the Internal Revenue Code. In other places, it's broader. But in this particular context of insider transactions, family members includes only ancestors, that is parents, grandparents, and so on, children, grandchildren, and great-grandchildren of disqualified persons and their spouses. So a cousin Howard, is not a family member for purposes of the self-dealing rules. So penalty taxes for payments of compensation to a cousin wouldn't apply. That's separate from the concept, especially under state law, that foundations and charitable organizations can only pay reasonable compensation. So even a cousin still can't be paid more than reasonable compensation. Early in the series, it was a bit of a concern to me because Howard describes the fact that his experience before getting the job at Wells Foundation was running a comic and vape shop, and how wonderful it is that he now works at the foundation running all the computers. Later on, we find out he does a really good job running the computers, or at least that's implied in the series. But yeah, it wouldn't be reasonable to pay a handsome IT director salary to someone whose skill level is in running a comic or a vape shop. But I think as we get to know and love Howard, we realize that he's pretty good at his job.
What other things does that cover? Because there's other areas that can fall under that definition.
Let me summarize here what self-dealing covers. Self-dealing is defined as any direct or indirect transaction with a disqualified person may result in self-dealing taxes on the foundation managers and the disqualified persons. So that's point number one there, is that the penalty is on the managers who approve it and the disqualified person. The penalty tax isn't paid by the foundation. The specific transactions that are subject to self-dealing taxes include sale, exchange, or leasing of property, lending of money or extension of credit, furnishing of goods, services, or facilities, the payment of compensation or payment or reimbursement of expenses of a disqualified person, and the transfer to or use by or for the benefit of a disqualified person of the income or assets of a private foundation. So as we mentioned in the discussion of Howard, the payment of compensation or reimbursement of expenses to a disqualified person or a family member is permitted as an exception for these self-dealing rules only if the compensation or reimbursement is necessary and reasonable. So we always, in any compensation discussion, we always go back to, is it reasonable? And if it's not reasonable, it's a penalized transaction. So Hans, we've covered a lot of ground here, and I'm really having a lot of fun with the conversation. As we wrap up this first part of our review, because it's just too much to put in one episode, I wanted to ask, given we've both watched the whole series and developed, I'm sure, some fondness for characters, who's your favorite character?
I think it might be Ron Funch's character. This is Molly's distant cousin.
Howard, right.
I just think it's hilarious that he's working for the foundation. And I guess, yeah, he actually has been doing a great job. But as you watch it, the first many episodes, it's not clear that he's doing anything at all, other than I think maybe workplace bonding with Nicholas.
Yeah, there's a lot to be said for that glue that holds an organizational culture together.
Right. Most of the scenes we see him in, if not all of them in the first several episodes, I mean, he's kind of just having... he's either chatting with Nicholas about their personal lives, or he has a fondness for Dragon Ball characters. It's that Japanese anime. But yeah, I think it's just funny to me that, he's gotten this job. I mean, you're already thinking about it as, I think when you set up that he's Molly's cousin, that who knows if he's actually qualified to do the job. Maybe he got the job because of his relationship to Molly. And they sort of build that up to be, that seems to be the case. And of course, that's not the case.
Yeah, he's pretty cute.
How about you?
So for me, I have to say Sophia, the foundation director.
Yep.
Yeah. She brings a lot of, I think there's a lot of good script writing in that trying to manage a founder is often actually quite a challenge for a foundation executive director. But she brings a fair amount of authenticity to a show that's otherwise kind of over the top and not very realistic. So I enjoyed Sophia a lot. She seemed to be a really, like I said before, authentic character and true to her own vision and trying to keep this foundation on a track where it could go off the rails with a founder that doesn't have anybody trying to put guardrails in or boundaries on what a foundation's allowed to do. So I respected that role, and I found her to be really
she put up with quite a few antics on Molly's end, I think. I don't know how many people would have I guess allowed Molly to continue, or not that I don't know that she could have stopped her, but yeah, I think she put up with quite a bit.
So that was fun to see.
What was your favorite scene? It may be tough to do that on the spot because it spans the whole series, but was there a scene that sticks out in your head as being?
I think I enjoyed I thought the airplane trip when they're on the aircraft, and I don't want to do too much of a spoiler, but the panic and the seeing the personalities. I think the airplane scene so a spoiler alert, when the aircraft goes through some turbulence, and I think that's the first point when you're starting to see a glimpse of the real characters and what their vulnerabilities are. That one was pretty amusing to me. Yeah.
Molly tells everyone that everyone's going to be fine. She does this all the time, and she's the one, I think she freaked out one of the worst.
Yeah, that was a pretty funny scene.
I think mine is going back to Sophia. I think they made her character, I think, very private. I think that was what we were supposed to gather from her. But there's a scene where she receives flowers at the office from someone named Jalen, and then Nicholas and Arthur. So Nicholas is Molly's assistant. Arthur is the accountant for the foundation. They're together, and I think they intercepted the flowers first. So they saw it. They were curious to know who this person named Jalen was. And then as they're surmising and they see through the glass in Sophia's office, a man named Tony, who they don't know, arrives at the office. He and Sophia have an argument that they can't hear. Nicholas and Arthur can't hear because they're behind the glass or outside. And they're arguing in Sophia's office. And I thought it was hilarious when Nicholas says, I have experienced lip reading, but I think that they were arguing in Spanish. So Nicholas doesn't know Spanish. So he lip reads what he thinks is being said in Spanish. And then Arthur says, I know some Spanish. So he's translating what Nicholas is lip reading in Spanish into English.
Yeah,
and of course it's not what's actually being said or happening, but I thought that was a funny setup.
I remember there's another scene that I really enjoyed, and that's when the three guys go horseback riding on the beach. I particularly enjoy that because I have horses, and so watching people who clearly don't know how to ride pretend to be able to ride, that was fun. So I like that one too. Any scene that involves horses is good with me.
That's good.
So with that, let's wrap up this first part. We'll look forward to bringing the rest of our review in the second half of this episode. I'm Cynthia Rowland, and you've been listening to EO Radio Show, your nonprofit legal resource, brought to you by the Exempt Organizations Group at Farella, Braun & Martel. If you have suggestions for topics or films you would like for us to discuss, please email us at eoradioshow@fbm.com. That's eoradioshow@fbm.com. And please subscribe so you don't miss part 2 of our review of Loot.